There's no way you can build a soup to nuts or rebuild a business soup to nuts from a Web 2 world into a Web 3 world without SUI. It just can't happen. You can do parts of it, but you can't do the whole thing. On top of it, what they've done really cleverly, have gone through the internet, looked at the component parts of the internet, and then rebuilt them all from Web 3. That's what is incredible about the Miston Labs team who built SUI. So they built Walrus, decentralized storage layer. Okay, that's very useful. And it's a permission database where you can allow certain people with permission. It's it's a smart database that doesn't exist. Humans are still driven by status and aspiration. Maybe some of the needs-based stuff goes away because your agent figures out what you need in the fridge and it'll go and do it. When I think about what can humans do in this new world, because everyone gets all doomy about it. We're all going to be at home, in the metaverse with nothing to do. I'm like, the thing that humans can do that the machines will never be able to do, ever, is be human. So anything human is of value, and advertisers will figure out how to do that. And that's not going to be from the AI. It's just some human element. I think there was a very important part of capturing in real life events is online. That's going to be the value prop. And this is where I think ticketing unlocks it. Something I've been looking at for a while is anybody who owns a ticket is attending a in real life event, and it gives a social graph and information that the internet captures, but in real life does not capture. That can then be served to advertisers. So I think there's something there as well. So it is going to change at scale. In some ways, it'll get more efficient. In other ways, it'll be more premium.
Raoul Pal is betting heavily on SUI, not Solana. Paul just announced that 70% of his portfolio is invested in SUI and that SUI is his first choice over Solana. This is a significant decision that demonstrates his confidence in SUI's development and user growth team. This isn't just a personal preference. He has the market data and analytics to back it up, despite his ties to the SUI Foundation. He highlights SUI's performance compared to Solana over time, its adoption, and developer momentum. Paul's choice of SUI isn't arbitrary. He emphasizes the rapid growth of SUI's network ecosystem with an increasing number of users and decentralized applications being developed on the platform. He was even more convinced after visiting SUI's offices and meeting the team behind the project, many of whom are former engineers from major tech companies like Facebook and Google. This team, led by former principal architect and chief scientist Evan Chang, is focused on building the platform and ensuring its sustainability. He was impressed by SUI's culture, which reminded him of Facebook's early days. The SUI's ecosystem is growing rapidly thanks to a community of SUI token holders and developers. According to Raoul Pal, these features might help outperform Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
We're at $4 trillion market cap today in crypto. I think it goes 100 trillion. So that's a way of capturing that mega trend. A friend of mine in Australia used to run treasury and trading at National Australia Bank, and they were building stable coins. I'm like, why are you doing this? He's like, you don't understand. Equities are going to T+1 settlement, so same day settlement essentially, or next day settlement. He goes, but FX markets are T+3 or T+2. Everything we do has a foreign currency because we're Australia. Generally speaking, most of our access to the dollar-based system is via the Japanese banks. So, and we're in a different time zone to everybody. So sometimes we've got 2, 3, 4 days where we've got hundreds of billions of dollars from the Australian financial system heading itself to the US financial system, and they lose all of the use of that capital. And they're like, so we're just going to build stable coins because then we can do it instantaneously and get around all of this.
Recently, Swiss bank Signum expanded its services to support the native SUI token, offering institutional-grade custody and trading services. Former Goldman Sachs executive Mustafa Al-Niama joined Miston Labs, SUI's founding team, as head of capital markets. This is another example of a Wall Street executive entering the cryptocurrency space. Al-Niama, who previously led Goldman Sachs' digital assets practice in the Americas, is now tasked with connecting SUI with leading financial institutions and driving institutional market growth, while fostering on-chain financial innovation. Al-Niama appears capable of successfully completing his mission and expanding SUI crypto's reach. He already has experience connecting Wall Street with cryptocurrencies. SUI is approaching its January all-time high of $5. Over the past 30 days, it has fluctuated between $3.60 and $4, with $3.60 as support and $4 as resistance. It briefly broke this resistance level, but the market then experienced a broad correction. The MACD continues to show a bearish trend, with the MACD line below the signal and a negative histogram, but selling pressure appears to be easing. If the price remains above $3.60, it could rise to $4 and eventually surpass its all-time high. Julian Battelle, research director at Global Macro Investor, estimates that the digital asset sector will grow from a current capitalization of around $3.5 trillion to $100 trillion within a decade. As the cryptocurrency market doubles in size, by early 2024, the groundwork is laid for an unequivocal diagnosis of the labor market in developed countries. He states that the shrinking workforce and unwavering promises of social benefits form a combination that reinforces the need for continued stimulus to keep the system afloat. Fewer workers, more technology, same debt. All of this is reflected in his key projections. We're just at the beginning of a global race, a race led by institutions, states, and individuals to accumulate as much Bitcoin as possible. This boom, he predicts, will propel the cryptocurrency universe from a $3 trillion asset class today to $100 trillion in the next 7 to 10 years. Doing the math, an increase in the current $3.55 trillion market cap implies a compound annual growth of 40% over 10 years, or around 61% if the horizon is shortened to 7 years. Both ambitious results, but unprecedented in previous crypto cycles. Battelle admits that the path will be incredibly difficult and incredibly rewarding in both the worst and the best of times, but insists that Bitcoin is part of the solution. As the pressure of this mounting debt continues to mount, cryptocurrency advocates are renewing their call for Bitcoin as a potential solution. While this call is not new, the emerging idea that stablecoins could help reduce the national debt is particularly intriguing. According to the latest data from the U.S. debt clock, each American citizen currently owes $107,982 in debt. Furthermore, the debt per taxpayer stands at $323,051. Federal spending totals approximately $7.1 trillion, while the federal budget deficit reaches $2 trillion. Raoul Pal has also described Bitcoin as a lifeline in the face of economic challenges such as debt and current devaluation. He explained that increased monetary production by central banks to manage debt dilutes the value of fiat currencies, thereby increasing the value of scarce assets such as Bitcoin. He also noted that Bitcoin not only helps protect against the 8% annual depreciation of fiat currencies, but is also increasing in value thanks to its growing adoption. Therefore, Bitcoin is a smart choice in times of economic uncertainty. With demand for the leading cryptocurrency growing, stablecoins play a different role and are emerging as a potential solution to the debt crisis. He explained that the continued growth of the stablecoin ecosystem could generate strong private sector demand for U.S. Treasury bonds, used as reserves to guarantee the value of stablecoins.